So what does JP Morgan have to say? The bank's global investment strategy group warned that escalating Israel-Iran tensions pose a short-term threat to investor sentiment as oil prices surged over 7% following Israel's strikes on Iranian nuclear military sites. Importantly, despite the volatility, the bank remains optimistic about the broader economic outlook, citing strong U.S. economic indicators, flexible U.S. shale production. So that's the U.S.'s main oil production mechanism, shale. And also citing OPEC plus spare capacity as stabilizing forces. However, JP Morgan acknowledged that threats to key oil transit routes like the Strait of Hormuz could still provoke further price shocks. So confirming what you indicated there, David. And JP Morgan also advised investors to brace for continued market uncertainty and emphasized portfolio resilience through diversification into uncorrelated assets like gold, infrastructure, and hedge funds.
Not to belabor the point, but the Strait of Hormuz is a key focus. In this article, security experts are warning that if the strait is closed, it could be catastrophic, especially for Europe, potentially slashing up to 20% of oil supplies. This would spike prices and have major effects in Europe and Asia. Oil futures have already surged past $70, reaching $77 because of these global tensions. These security experts warn that this could trigger a global recession. Something of note, though, is most of China's oil goes through the Strait of Hormuz, and China and Iran are reasonably close allies.
Interesting. That does seem like a contributing factor to what ultimately happens here. All right. So another key question here is how involved will the U.S. get in this whole conflict? Obviously, they're already involved to some extent, having green-lighted the Israel's attack here. Now, in a brief exchange reported by ABC's Rachel Scott this weekend, she asked Trump about Israel's push for American support in dismantling Iran's alleged nuclear program. And he said, "We're not involved in it. It's possible we could get involved, but we are not at this moment involved." So, all right.
Classic Trump phrasing. Yeah. Let's put on our Middle East strategic hats just for a very brief second. What are your thoughts on the Strait of Hormuz thing kind of materializing? I think the poly-market odds are way too high. I think 35% is overstating it, actually.
Yeah, I think, look, I'm LARPing it as a geopolitical expert here, but
Exactly.
it does seem like shutting down that critical point it's like poking the eye of Sauron, and you're just asking for trouble. And
Also, all maybe Iranian allies in the Middle East, right, who make all their money through oil, they'd be like, dude, what's going on, man? Come on, we still got to make money over here.
Yeah.
All right. Anyway,
yeah, true.
So
on the other hand, the more the price of oil spikes, the better it is for those allies, right? Whose economy is
mixed.
Primarily based on oil exports.
It's mixed, right? It's an equation. It's how much can they get out at what price, right? So they could even though the price goes up, if they can't sell as much, then they could lose money. The other problem is, though, dude, with oil that like most people don't think about is most of these countries, they can trim the supply of oil that they're producing, but they can't stop it, right? You can't just turn it off. And so if their reserves start to fill up, they just have to start dumping it on the ground, right? Like
or burning it.
Or burning it, yeah, right? Like Anyway, so escalation, though, I think this is something that we could actually talk about because it impacts Bitcoin and crypto and all assets. We're currently in a kind of a tit for tat, right? We're sending missiles and drones. There's no kind of face-to-face forces, so ground forces, and the U.S. is not involved yet. I think, just to start it very simply, if we continue on like this, tit for tat, I think the worst of the price move has already happened, right? As in this risk is already priced in. And if things escalate, either ground forces or whatever, or U.S. involvement, I think you might see another leg down.
Yeah, I think so. Actually, just to add to that, if things stay pretty much as they are, not only have we seen the worst, but I think we're going to see a recovery quickly back to where we were like 5 days ago. So in terms of Bitcoin, like close to 110K. But yeah, as you say, if it gets worse, probably going to see another dip.
Yeah. And maybe the worst thing that could happen actually is if they do try to like close the Strait of Hormuz. That's a weird thing. Like I think, yeah, you'd see oil price spike up. And I imagine that would cause Bitcoin to go down with equities, right? Risk assets are not going to like an oil shock, basically, right? So I think that might be maybe one of the worst things. I don't know. That ground forces, I don't know. It's something like that. Yeah.
One interesting thing to note here is this post from Mohammed Elarian, who is the chief economic advisor at Allianz. I believe that's a large European investment bank. And he says the 10-year yield's noticeable rise today further reinforces the historically unusual behavior of U.S. government bonds. So normally when there's geopolitical uncertainty like this, investors tend to flock to U.S. Treasuries as a safe haven, which drives the yield down on especially that 10-year note. And the fact that they spiked on this news, see they've come off a little bit here, but they did spike on the news, indicates that the investors are not looking to U.S. Treasury as a safe haven asset as they once did. And yeah, they're as we saw, like gold spiked. Now, the question for our purposes is what happens to Bitcoin? And surprise, surprise, Hunter Horsley, Bitwise CEO, noting that this actually, what this does, in his opinion, is it increases the total addressable market for what Bitcoin could be from just what gold was, which is already 10 times the size of Bitcoin's market, to now U.S. Treasuries. Right. So if people are moving away from U.S. Treasuries as a safe haven asset, where are they going to go? Yeah, gold, but also Bitcoin. So the total address, like the potential for Bitcoin is not just gold, but also the $30 trillion U.S. Treasury market that, according to Hunter Horsley, Bitwise CEO.
Yeah, I mean, this to me is obviously strange. Some of the financial people I follow, like Mike Green, famous for the passive investment stuff at Simplify, and Brett Johnson, Dollar Milkshake Theory, Santiago Capital, and there's some others that I've talked with or listened to. They tend to think though that what happens, and apparently this plays out in the past. What happens when U.S. Treasury yields spike, right? Let's say they're at 5. Let's say they go to 6 or 7 or 8. So what happens in the world at that point? Do people flee Treasuries or do they start buying them nonstop, like by the fistful? And they say that the Treasuries will work like a free market is supposed to. The interest rate goes up because people don't want to buy it or they're dumping them. And then at some point, they start buying them a lot. Right.
Yeah, well, there has to be a point where the yield offered by these long-term bonds is juicy enough to entice people to move out of risk assets like equities, Bitcoin,
so
whatever.
It's interesting. It's interesting.
Yeah.
It's an interesting dynamic, and this is way above my head, so I don't really have any kind of basis to know or hunch basically. But yeah, I'm watching it, and I want to see how this plays out.
There's a lot of games that the government, the U.S. government, can play here as well. Like I believe they're buying treasuries. They're doing like treasury buybacks or something.
Well, that's normal. That's normal.
Okay.
That's a normal thing that all banks do. It has to do with on the run and off the run treasuries, basically. Mm-hmm. Treasuries that are older than the year in which they're issued in have far less liquidity, and so treasuries, like central banks or treasuries, often will buy older issuance to keep the stock of treasuries fresher, and so it's a very common thing. And there's a bunch of people on X who are talking about it, and then a bunch of people kind of debunking it as a scary thing.
Okay, but if treasury yields go up to 7%, the U.S. government is just going to 10% of their receipts are going to have to be spent paying interest on their insane debt. So it's like something has to give here on one side or the other. I don't know how it plays out, but as Lynn Alden says, nothing stops this train, and the money printing continues, and the assets with limited supplies, whether it be like high quality stocks or gold or Bitcoin, will continue to increase in value.
But again, so I mean, I'm not saying that she's wrong at all, but let's imagine a world where treasuries go to 7 or 8%, which is like a catastrophic world, right? That's like we're in World War III, basically, honestly, right? That's the kind of, if they do that quickly, right? What do other countries look like? What does the EU bond issuance look like? I mean, the EU member countries. What does Japan look like, right? They're a basket case right now, right? Are they not just absolutely devastated? I can't even imagine what would their yields be,
Yeah.
And it would just be backbreaking.
So it goes
for the
back
rest of the
to
world.
the U.S.
in China
being,
too.
Yeah, the dirtiest, the U.S. bonds being the dirtiest clean shirt.
Yeah, and it would break these countries, and I think all that capital would flee to the U.S. because it would just break all these other countries, right? And it would just be awful. So anyway, I mean, and again, this doesn't mean that you should buy treasuries or anything like that, or that they're not going to fail. But boy, would it be bad for everybody.